All right, let's talk about getting ready for 2026. It is right around the corner. And you know what that means? It's the perfect time to get a handle on your finances. So we're going to walk through everything you need to know to hit the ground running, feeling confident and totally in control of your money.
So be honest, when you think about money and the new year, does it feel a little stressful? That's totally normal. But feeling in control isn't about having all the answers right now. Nope. It's just about knowing the right questions to ask. And that's what we're here to do.
I want you to think of this as your annual financial checkup. It's just 4 simple steps to get you on track for a really successful 2026. No confusing jargon, just a clear, straightforward plan. Okay, you ready? Let's dive in.
First up, we've got to talk about the foundation of any good financial plan, taxes. The rules tweak a little bit every single year, so knowing what's new for 2026 is absolutely crucial for keeping more of that money you work so hard for.
Okay, take a look at these numbers. At first glance, you might think, hey, the tax rates are the same. And you'd be right. 10%, 12%, 22%, those haven't changed. But here's the key. The income levels for each of those brackets, they've all shifted up. Why? Inflation. And honestly, this is good news for you. It means you can actually earn a little more before you get bumped into a higher tax bracket.
And this is such an important idea to get your head around. Your marginal tax rate. Just because your income puts you in, say, the 22% bracket, that does not mean you pay 22% on all of your money. It just doesn't work that way. You only pay that top rate on the last dollars you earn. It's kind of like filling up buckets. The first bit of your income is taxed at 10%, the next bit at 12%, and so on.
Here's another number you're going to want to remember for 2026. The standard deduction for single filers has gone up to $16,100. This is awesome. It's an amount you can subtract from your income right off the top, which lowers how much of your money is actually taxed. Oh, and for seniors 65 and up, there's even an additional deduction, which means an even bigger tax break.
Now, for all the parents out there, the child tax credit is a huge deal. For 2026, it's worth up to $2,200 per kid. And get this, up to $1,700 of that is refundable. What does that mean? Well, it means that if your tax credit is bigger than the tax you actually owe, the IRS could literally send you a check for the difference. It's a direct financial boost.
All right, let's roll into step 2, crafting your spending plan. You know, what most of us call a budget. But please don't let that word scare you. All it really is a plan for telling your money where you want it to go. You're the boss.
If you're new to this or just want something simple, the 50-30-20 rule is a fantastic place to start. It's so straightforward. Half your after-tax income, 50%, goes to your absolute needs, like rent and food. Then 30% is for your wants, the fun stuff. And a really solid 20% gets dedicated to savings and paying down debt. It's all about creating balance.
But hey, one size definitely does not fit all. If you love details and want to know where every single penny is going, then zero-based budgeting is your jam. But if your number one goal is just to build up that nest egg, maybe try the pay yourself first method. With that one, you just automate your savings before you even think about spending. You just have to find the one that clicks with your personality.
Okay, step 3. This is a big one for so many of us, conquering debt. You know, having a clear strategy here can change everything. It turns this big, stressful burden into a goal you can actually manage. Not to mention, it's the key to a great credit score.
So first, you've got the debt avalanche. If you're looking at it from a pure math perspective, this is the most efficient way to go. You attack the debt with the highest interest rate first, no matter the size. By knocking out that really expensive debt, you end up saving the most money on interest over time. It's a strategy for the planners among us.
And then you've got the debt snowball. With this one, you actually ignore the interest rates and you focus on paying off your smallest debt first. The magic here is all about psychology. When you completely wipe out that first small debt, you get this quick win, this rush, and that builds some serious momentum and motivation to keep on going.
And this quote just hits the nail on the head. Paying off debt is a marathon, not a sprint. The numbers are important, sure, but your mindset is just as important. Staying motivated is what will get you across that finish line.
So let's put some numbers to this, right? In this example, yeah, the avalanche method saves you a bit more money, about $455. But, and this is a big but, look at the payoff time. It's exactly the same. So what does that really tell us? It tells us the best plan isn't the one that looks perfect on a spreadsheet. The best plan is the one you will actually stick with, period.
And that brings us to our final step. It's time to shift our focus from today's bills to building wealth for tomorrow. Let's talk about investing and saving for retirement because it is so much more accessible than you might think.
Check out this number for 2026. The annual IRA contribution limit is jumping up to $7,500 for folks under 50. And if you have a 401k at work, that limit is going all the way up to $24,500. These increases are a massive opportunity to stash more cash and let it grow for your future self.
So, where do you put the money? For an IRA, you've basically got two main flavors, traditional or Roth. The simple way to think about it is, do you want a tax break now or later? A traditional IRA can give you a tax break today. A Roth IRA gives you tax-free withdrawals when you retire. But what you invest in matters too. Simple, low-cost options like index funds, which basically just track the whole market, or target date funds, are fantastic ways to get started without needing to be an expert.
And really, this is what it all comes down to. Getting your financial life in order isn't about some single giant leap. Nah, it's about making a series of small, smart decisions, one after the other. It's understanding the tax changes, picking a budget that works for you, choosing a debt strategy, and just consistently saving for your future.
So that's your financial checkup for 2026. You've got the information, and that's powerful stuff, but only if you use it. So the real question is, what's the one thing you're going to do, today or this week, to take control and start building your financial future? Thanks for tuning in.